My mistake is that I added aggressively a third time on a new 1 minute high. I think here. I think it was here where I added, and I tightened my stop loss. And I broke my rule of the middle of the range. Safest way to do it is the stock broke. Now wait for a pullback, wait for a bull flag, wait for an ABCD pattern, and add to your position. Hey everyone, this is Ayman and we are back with another video for the stock trading simulator series. I want to talk about another trade I have taken on Thursday, April 7th, PFE. It was an amazing trade, A+, perfect on all the time frames, but I messed it up with one bad ad, unfortunately. I'll tell you the way that I executed the trade and the way I was supposed to execute the trade just to avoid the mistake I have done. First of all, why did I pick PFE on April 7th? Look at PFE. First of all, you could see that in this period from December all the way till the end of February, it was in a steady downtrend, making lower low, lower high, lower low, lower high, just a steady downtrend until it hit the 200 moving average and found a bottom right there. After it found the bottom, it squeezed with literally no pullbacks all the way till this resistance around here, which is 28th of January. Then it pulled back and I saw bull flag around here. I remember myself playing it either in 25th of March, either in 29th of March, unfortunately with no success. But in my opinion, it wasn't a bad setup. It made a bull flag setup and I expected a continuation for the reversal. People saw the resistance level, they took some partials, it pulled back 25%, 30%. And now it might resume the trend. That failed, it continued pulling back, and it pulled back into the 50 moving average. If you are a BBT member, and if you watched my extreme reversal webinar, I told you that I love reversals where the stock pulls back into the, first of all, breaks of the 50 crosses with the 9 and the 20, then it pulls back into the 50, and the 50 starts holding as support. Now I explained that on the 1 minute chart, 15 minute chart, and the 5 minute chart because those were intraday reversals. Here it is the exact same way, but we're using a bigger time frame. Now you could see that the stock pulled back into the 50, it started holding around it, and it squeezed with a decent bullish candle. There is a range between 52.40 and 54.50. It broke to the downside, fake break, and after the break it goes all the way back inside the range with a bullish candle. That by itself shows me that the strength is still there, the stock is still in an uptrend, and we might have a continuation after the 6th of April. Plus, we have no resistance all the way up here. Now, let's take a look at the 60-minute chart. And the 60-minute chart also looked beautiful. You could see that we're having sort of a resistance around here. Let's get slightly lower. There it is, somewhere around here in this range. It's range, right? You could mark this level, you could mark this lower. It doesn't really matter. Anyway, there is sort of a resistance that now is acting as a support. Before the market opened, it sold off all the way into the resistance. And I told you the way I play those. You either buy it closer to the support, or you buy it for a breakout. My first plan was to buy it somewhere around the support area after market opens. Let's go to the 5 minute chart and go to the 1 minute chart and see how it behaved right there. Let's actually flip those since I usually do them this way in the replay. So there it is, it's selling off closer to the level that I'm interested in playing. And look at this, unfortunately instantly squeezes. It doesn't even give me a chance to enter closer to the support area. But you could see that on the 5 minute chart there is a fake break below this range. On the 1 minute chart, it made a bullish engulfing and a breakout. Now I'm entering around here, and after entering at this area, my stop loss is the low of the 5 minute candle range. The next place you could enter at, or you could add at, is the breakout area. Where is the breakout area? There it is, somewhere around here, right? So you could add at the breakout area and you could move your stop loss to the middle of the range. There is the breakout area. So you could add it at the breakout area and you could move your support somewhere into the middle of the range. My mistake is that I added aggressively a third time on a new 1 minute high. I think it was here where I added, and I tightened my stop loss and I broke my rule of the middle of the range. Safest way to do it is the stock broke. Now wait for a pullback, wait for a bull flag, wait for an ABCD pattern, and add to your position. I got wicked out literally to the penny at 52.86, and if I waited for the ABCD pattern or the bull flag, I could have seen this pattern. It goes up, pulls back, continues, and the moment it makes a new high, I could add to my position and now have this as my stop around here. And after that, just simply hold on to the stock until it hits your potential target or the ATR. The ATR on this stock was $1.50. So you could have gone from 52.30 to 53.70, which is here. Sell the position 100% of the ATR, or you could swing trade it. Looking at the daily chart, we are in a nice pattern, right? There is literally nothing ahead of us all the way to $54. So you could hold it intraday for $50, or you could hold it for a couple of days, just small portion of your position, hold it for the next day, and maybe you could even add on the next position and hold it all the way to $55. So this was the trade that I've executed. Unfortunately, I got wigged out on it here before it worked. Lesson learned, and I wanted to share that mistake with you. Hopefully you do not get into the trap that I got into. Have a great day, everyone. If you have any questions, as always, write them down in the comment section. Your comments will be really appreciated. And I'll talk to you on Monday. Bye bye.